If you are unsure of what an ETF is or which ETF is right for you, or if you should buy multiple ETFs, well, that's what we're going to talk about in this video. So with that, I'm going to answer your questions. The first question is, what is an ETF? An ETF is an exchange-traded fund, kind of like a mutual fund, except it trades like a stock. And they are created by financial institutions, and they often represent a sector or an industry or even the S&P 500 or NASDAQ. So there are many different types of ETFs, and they're just as easy to buy as a stock. So if you have a stockbroker or a brokerage account online, they're just as easy to buy as, say, Ford, Tesla, or Apple. The next question, aren't all ETFs basically the same? And the answer is absolutely not. Different ETFs are run by different companies, and they have different managers within those companies who run different ETFs. Now, some are more highly managed than others, but the thing is, people need to run these ETFs, especially if they're mirroring certain indexes like the S&P 500. So if the S&P 500 adds or subtracts a stock, well, then that fund has to do the same. But a more managed fund would certainly have to make adjustments based on the goal of that ETF. And different ETFs focus on different sectors, like some, like the XLE, focus on energy. The QQQ focuses on internet stocks and technology. And there are others, such as the XLF, which focuses on financials. So if you want to focus on a specific sector, and rather than just buying a stock, trying to figure out which one is the best, you can buy a basket of stocks within that sector and be more diversified, but still take on the profits of that sector as it's moving forward. And of course, losses if that sector falls out of favor. The next question is, if ETFs are like stocks, then can you get dividends from investing in ETFs? And the answer is absolutely yes. For example, if you invest in the SPY, which tracks the S&P 500, you would earn about a 1.5% annual dividend yield. Now, there are other sectors that do a lot better, such as the energy sector that has an over 3% annual yield, and there are actually ETFs that focus on companies that give higher dividends. So take a look. There are dividend-focused ETFs if that's what's important to you. And here's another question related to ETFs and stocks. If ETFs are like stocks, can you buy options on ETFs? And the answer is absolutely yes. Now, in that situation, if you want to buy options, I would stick with the higher volume ETFs, such as the SPY, the QQQ, and the IWM, which represents the Russell 2000. Next, are ETFs easy to trade? And the answer certainly is yes. They're easy to buy and sell for the most part, but if you're going to actually trade, meaning day trading or short-term trading or options trading, again, I would stick with those highly liquid ETFs, again, like the IWM, QQQ, and SPY. Here's an excellent question. Do ETFs have expenses? And the answer is absolutely yes. Not like mutual funds, they have what is referred to as an expense ratio. And that ratio can range anywhere from 0.02% all the way up to 0.2%. For example, the SPY, which tracks the S&P 500, has a 0.09% expense ratio. And the VOO from Vanguard, which also tracks the S&P 500, has a 0.03 expense ratio. So each index fund, each ETF has its own expense ratio, all depending on the sector and how highly managed that fund is. Hey, if you have more questions about ETFs, put them in the comments below, and I'll see you in the next video.